Hi, I'm Shein Shanin and this is Making the Call. Things are not looking good for OldTown. Its main earnings driver is its F&B segment, and most people know it for its white coffee. But as RHB Research points out, the market for white coffee is getting crowded, with giants like Nestle, Power Root and Super all fighting to get their piece of the pie. As a result, OldTown seeing slower revenue growth even as it spends more on promotion. Plus, consumer spending could take longer than expected to kick in, given the strengthening of the US dollar. RHB says OldTown's got a bleak outlook ahead. It's downgrading its call from neutral to sell, target price RM1.16. Meanwhile, Affin Hwang Capital Research has issued its first rating on Amcorp Properties. Amcorp's a niche developer that's been investing in the London property market since 2009, taking advantage of the weak pound sterling and lower prices. In London, it's involved in 6 projects including Burlington Gate, Merchant Square and Blackfriars. It's also ventured into Tokyo with Fora's Nanpeidai and Court Annex Roppongi under its belt. According to Affin Hwang, these projects are set to give Amcorp's earnings a quantum leap in financial year 16 once contribution kicks in. For FY17 and 18, it's looking at a 31 to 49% bump in earnings as contribution of these overseas projects jump to 90%. The research house has a buy call on the stock with a target price of RM1.53. Meanwhile, Westport's got its target price cut by Hong Leong Investment Bank Research after the Port Klang Authority postponed the container tariff hike again. The new deadline is now November 1st, but bear in mind that's according to the research house, Westports needs at least 1 month to give its clients notice before increasing the tariffs. So that means the hike might only come into force on December 1st, assuming it doesn't get delayed again. On the bright side, Westports isn't too bothered about the slowdown in China as well as the Asia-Africa trade route. For the first half of the year, its container volumes are already up by over 10%. Plus, it's got a great business model of long-term, sustainable, recurring yet growing income. Hong Leong's retaining its buy call on the stock, target price RM5.26. And that's it for Making the Call. I'm Shein Shanin. Thank you for watching.